We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
And you're back on Liberty Nation Radio, heard coast to coast on the Radio America Network. I remain your host, Mark Angelides, and we are joined by Liberty Nation's economics editor and general fiscal whiz, Mr. Andrew Moran. Thanks for being here, Andrew.
Thank you for having me.
So, Andrew, I want to talk about essentially how America, we're talking economics, housing markets, things like this, how it's changed since Donald Trump specifically ramped up his crackdown on illegal immigration. What's the view from 20,000 feet?
Well, you can see that. So, for example, one thing the administration recently pointed to was the number of foreign workers in the civilian labor force. So they use that number to determine the number of actual self-deportations. So Stephen Miller, I think he was on Fox News, and he said that, around 1 million people have self-deported because the civilian labor force numbers show that there was a 1 million decline in just the last few months alone. And that number is actually outdated. If you look at the latest number, that number is actually 1.45 million. So the number of foreign workers are really on the decline in the United States, and this is having a wide range of impact. Now, whether that's positive or negative depends on your answer.
Let's dig into those impacts. So from my position, and of course, my position is shadowed by my beliefs, my experience and things. But for me, I would say that they are majority positive impact, as in Americans are can command a better market rate because there's fewer applicants to a job. Is that correct or incorrect?
Well, I guess it depends on what sector you're referring to.
Sure, of course.
Hospitality and leisure, which is heavily dominated by foreign workers, and yep, most likely. One number that you always want to look at, especially in the last few years, because this dates back to even before the pandemic, was the divergence between the employed foreign workers and employed U.S.-born workers, and that gap has really narrowed. So just this year alone, the number of employed foreign workers has declined around, 4 million, and the number of employed American workers is up about 2.4 million. So that number and that gap has really closed under the current administration. That largely has to do, of course, with how the president has handled immigration and the border crisis.
So the people who are least happy about this would be as Bernie Sanders calls them, the oligarchs, because obviously wages along with energy are one of the let's rephrase that. Taxes, wages, and energy costs are the three big cuts to your bottom line. Taxes are coming down. I think we should get into what's happening here, but with the extension of the Tax Cut and Jobs Act, taxes are generally coming down across all levels. In terms of energy prices are coming down as well. Only marginally. I expected them to fall more, but I think that there's a bit of a lag effect on that. Do correct me if I'm wrong. But with wages, they're going to have to go up because of the lack of immigration, the self-deportations, things like that. And, of course, the closing of the border, which means there's no new people coming in. I believe border crossings are down somewhere between 93 and 97%. And those people would go to work, but they go to work at very, very cut rates, which are undercutting American workers. So they get two benefits: taxes down, energy costs down, and one negative. But that negative, that's got to be good for the American worker, especially people looking to get into work, hasn't it?
Okay, all right. So there's a few things I got to touch upon. So
please unravel it.
On energy prices, they have come down. I recently did something about Labor Day gas prices. It's the lowest in about 5 years. Oil prices, they've fallen to as low as $61 a barrel, though at the time of this recording it's around 60, it's actually risen to 65. Now when it comes to wages, so yes, wages are going up on the real, which is inflation adjusted for blue collar workers, it's the highest of any president in almost 60 years, rising 1.4% in the first 5 months of 2025. Nominal wage growth, it's still hovering around 4% on a year over year basis. Now, if you look at the last consumer price index report. You were not here, but if you read it, you see that surprisingly in this climate, because you have tariffs, you'd think that goods inflation would be the biggest driver of inflation. However, for whatever reason, services inflation dramatically rose and accounted for a lion's share of last month of the July CPI increase. Now, many economists have presented theories. One of them is that immigration has played a role. So if you're having fewer illegal immigrants working in the service sector, therefore you're hiring American workers, and therefore you're paying them higher wages and they get, benefits or whatever the case. And that contributed to the price pressures in the services sector. And now a lot of economists and probably the entire Federal Reserve System, they pay more attention to the services side of inflation because it can serve as a broader indicator of where inflation might be heading. It's still very labor intensive. They still have the input cost pressures from a variety of areas. So, I was watching CNN the other day. I tortured myself.
I'm sorry to hear that.
And I saw a segment with Abby Phillips and this one, I think she's an economist. I forgot her name now. And she was saying how if you want higher wages and if you want to have fewer immigrants, then you want to have higher services inflation. Now, I'm sure that is up for debate, but I thought that to be quite interesting at a time when everyone just hated inflation. But now she's saying, we as a conservative, she's saying, I want higher inflation now.
Well, yeah, I mean, it's one of those. It's putting the cart before the horse, I think, is maybe the right way to look at that. You want the effects of a higher inflation without necessarily the higher service inflation. It is an odd way to look at it. It's a very odd way to look. Now let's talk about another sector here. I came across an article that I shared with you from Washington D.C.'s most prominent newspaper, and it was about house prices and housing availability. And I read through that article and I sent it to you because I was amazed by one thing. The authors argued that there's no need for federal intervention because this problem is taking care of itself, and it seemed to stay away entirely from the fact that there are 2 million plus less people in the country than there were 6 months ago, which you'd think that would be like a huge indicator. That's like a big flashing sign saying there's more homes because there's 2 million less people in the country. What did you make of it?
Yeah, there were halfway through the article, it talks about I think it was the Federal Housing Finance Agency or the National Association of Realtors, and they said that the U.S. has a housing shortage, affordable housing shortage of around 4 to 5 million, but nearly half of that is in California. So therefore, that's it's really skewing the results. But why? But now, if you have the whole illegal immigration thing, a lot of illegal immigrants are in California. So if they're being shipped out of the state, going back to where they came from, then of course you're going to have more housing stock available. But one thing that a lot of people make a mistake on, they think that illegal immigration raises house prices. But that's not necessarily the case. The one area that they raise prices on is the rental side of the U.S. housing market, because of course, someone coming from Guatemala making $6 an hour, that individual's not going to be able to afford a house again.
Of course, this isn't the Obama days. The guy with $6 isn't going to be able to buy a mansion. This isn't 2009.
So anyway, they're more likely to rent, therefore crowding out a lot of American individuals. A lot of young people can't afford to buy a house, so therefore they lift up the rental prices. So the rental market is more of a concern when you look at the immigration file, and the rental market is still elevated. I mean, I think it was Redfin a couple of months ago. They said that rental costs were just $4 shy of the all-time high. So that's still an issue when it comes to housing inflation, housing affordability.
Yeah, I do wonder though if there isn't a more direct connection to that, because a lot of people, I know we talk about the really big companies buying up housing stock. Now that's clearly going to be putting price pressure on people wanting to get on the housing market. But there's also people who are doing, in England we call it the buy to let market. So it's some guy with a fairly stable job. He might buy a second property and then try and pay off that mortgage with the rental income from that. And so when you have pressures in the rental markets, that's also affecting what kind of mortgage rate they're getting, because if they have to rent at market value, then of course what kind of deal they're getting from the bank is also going to make a difference, isn't it?
Yeah, absolutely. I mean, up here over here in Canada, we have the exact same problem. I mean, I think the last number, I think it was from the Royal Bank of Canada, and they said that in the Ontario real estate market, I think is 60% of all new purchases came from investors who have 2 or more residential properties. So that's really exacerbating the issues that at the very least the Ontario housing market faces, and I'm sure over across the pond in the United Kingdom. Mortgage rates is another issue too. That's another factor that's really adding or exacerbating the housing affordability crisis, because when you have a 6% mortgage rate or 7% mortgage rate, then that's going to raise your monthly housing costs. And they say the rule of thumb is 30% of your income should be dedicated to housing. But the numbers these days is around 40 to 50%, which is unsustainable for a lot of people, especially if the U.S. labor market weakens, which recent data suggests that it is.
I've always thought that 30% number is insane. I don't think I've ever paid 30%.
I did.
Anywhere.
I did. I still do. I still do to this day.
That's crazy town. But that's Canada for you. That's I'm trying to think of the ending of Chinatown here, but that's Canada town for you. We'll be back with Andrew Moran after this short break. Don't go anywhere.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.